Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And we are back with a fresh new week. And after yesterday's good rebound that we made us hope that indeed the Santa rally is on, we'll watch whether today Nifty can extend its gain to the third consecutive day. But it's the weekly expiry day for the Nifty, so volatile moves can be expected given that traders close in their positions at the year end. But for now, the trends in the GIFT Nifty have been indicating a positive start for the Indian markets, and to back it, the global cues remain quite supportive. If you look at the Wall Street, they particularly extended its winning streak for the third consecutive day. We did see Dow Jones that was up by about 200 points, and even Nasdaq and S&P 500 extended their winning streak to about the third straight day, given that investors have continued to favor technology stocks as of now. Mirroring the moves of the Wall Street, Asia Pacific markets also inched higher this morning, and they remain largely on a strong foot as of now. But yes, what is fueling the rally? That is the increased Fed rate cut bets and the geopolitical tensions. Because if you look at from a geopolitical point of view, be it the US oil blockade with Venezuela, which has been taking place, and the Ukraine's war with Russia, which continues to fuel the rally as of now, and of course continues to fuel the safe havens as well. Because even yesterday we have seen both the gold and silver prices have soared to about new lifetime highs. So yes, precious metals still remain quite favorable among investors, given that uncertainty still lingers in the market as of now. But yes, on a similar note, we did see oil prices also inched higher due to the risks of geopolitical tensions, and of course how the US has created an oil blockade with the Venezuelan oil tankers as well, as a result of which we have seen that crude oil prices have also edged up higher as of now. But yes, for our own markets, the overhang of a US trade deal still persists. We were hoping that by December first week the deal materializes, but still the delay continues, and yet so far as of now this year is going to conclude, but we still don't have any evidence of a proper deal with the US as of now. But yes, moving on to the show, we'll understand how all of these cues are going to impact the markets, and we'll understand from our experts how you should be positioned in a trade environment like this. We'll also be discussing some individual stock movers, the headline being Ambuja Cement's approval to merge Orient Cements and ACC under one entity. So we'll track how these stocks and of course the rest of the cement basket behaves today. But yes, don't forget to drop us your stock related queries, and we'll address them shortly. And let's take a quick check of the top headlines at this hour. Wall Street ends higher for the third consecutive session, supported by rebound in tech shares and expectations of Fed cutting interest rates in 2026. The Dow Jones gains over 200 points, while Nasdaq gains 0.5%. The Treasury yields inch higher, while dollar continues to soften. Asia Pacific markets inch higher this morning, tracking Wall Street gains and hoping a year-end rally. Meanwhile, the GIFT Nifty is also indicating a positive start for our own markets. Crude oil prices continue to edge up on risks of supply disruptions in Venezuela and an attack on vessels by Ukraine on Russia. Gold prices meanwhile climb to record highs, while silver also follows suit. And Ambuja Cements has approved amalgamation of subsidiaries ACC and Orient Cement with the company to create a pan-India cement powerhouse. Ambuja Cements will issue 328 shares for every 100 shares held in ACC and 33 shares for every 100 shares held in Orient Cement. All right, in yesterday's trading session, we did see that the markets have kicked off this week on a strong note after, last week we have seen that the markets ended quite negatively. But yes, yesterday we did see that the Nifty has ended at its highest level since December 5th. And in the past two trading session, Nifty has already gained by about 350 points. But yes, the all-time high which was touched on December 1st, that is your 26,325, Nifty just remains a tad bit, away from it. That is your 150 points away from its record high levels. We'll watch out whether this week is going to be the week when Nifty reclaims its record high levels and moves past it. But yes, whether the Santa rally continues in today's trading session is something that we'll watch out for. But yes, broad-based buying was seen yesterday. 40 Nifty stocks ended in the green, and among the sectoral indices, IT, metal and auto indices led the rally. Even the broader markets quite outperformed, and the participation came in largely from the small cap space because they gained by about 1%, and mid caps also ended traded nearly 1% in yesterday's trading session. But among some good macro data that has come in, that is your November 8 core industries growth, which has proven to be at about 1.8%, and that has grown on a month-on-month basis. So that's a positive cue that came in from a macro point of view. But yes, markets will be awaiting for further macroeconomic data, not just from Indian front, but of course from global front as well. The US third quarter GDP print will be out later today, and economists have been seeing an average of about 3.6% of the GDP front. Core PC advanced estimates also is expected to be out today, and that is quite critical for the interest rate decision making. So yes, all of these macro data point of views will further provide certain direction to this particular market. But yes, for our own markets, Nifty's weekly expiry day is today, and it is crucial given that many is expected to close their positions today and not wait for the monthly expiry, which is due next Tuesday itself. So yes, some volatile moves could be expected in the markets today. But yes, from where we stand on the fund flows position, FIIs, they sold stocks which was worth about 500 crore rupees in the cash markets. This comes after 3 days of consecutive buying. However, the quantum is quite lower, but still they have sold stocks which was worth about 500 crore rupees in the cash markets. DIIs, however, providing certain cushion, bought stocks which was worth about 3800 crore rupees in the cash markets. And among the option queues data, Nifty put call ratio jumping to about 1.42 from 1.13 levels in the previous session, and the stock that continues to be a part of the F&O ban, that includes your Samman Capital as of now. But yes, let's take a quick check of where the pre-open rates stand as of now. If you look at Sensex, it's exhibiting gains of about 100 points. Nifty is also marginally higher above that 26,200 mark as of now in the pre-open trade. But let's understand from our technical expert of the show of how the trade setup looks like. Joining me is Ajit Mishra, Senior Vice President Research at Religare Broking. Ajit, good morning. Now that we have Nifty above 26,150 levels, can it retaste the record highs this week?
Yeah, good morning, Lovisha. And first of all, festive greetings to you, the entire team, all the viewers. So yes, we are finally seeing some sign of relief, rebound, but it's been almost like, 3 weeks we are seeing similar kind of trend. Means initially we see that market witnesses recovery from the key levels, but by the end of the week, we at times surrender the gains or build on those gains. So as of now, the consolidation is still on, but the good part is that the key sectors, banking, IT, they are still maintaining the positive tone. For any next leg of the momentum, we need further strength or buoyancy in the banking pack. So we are closely eyeing on that part. But having said that, all the sectors on the rotational basis are contributing to the move. So 25,950, the area where 20 EMA is placed, we are seeing every time we see a dip below this level, markets make an attempt to reclaim that and sustain above the same. So this time around also 25,950 will continue to be the key support area to watch out for. Today being the weekly expiry, 26,200, 300 zone might act as a resistance. So upside after yesterday's move may seem scap, but the tone is likely to remain positive. The focus should be more on buying on dips opportunities. So 26,050, 26,100 is a zone basically where you should look for buying opportunity in the index. At the interim, you should continue with stock specific approach as well.
Some stock specific approach. But Ajit, we did see a good participation that came in from the broad end of the markets, particularly for small caps that gained by about 1%. What can we expect from this space, and do you expect the recovery to continue?
See, the challenge is, Lovisha, that small cap, off late we were seeing noticeable underperformance, and now a bit of a relief definitely is welcome move, but still we are completely not out of woods. Means the small cap index is still trading below the long-term averages. So 17,800 for the Nifty small cap index is where the resistance is. So which is roughly around 200 points away from the current area. So that might cap the up move in case, if it fails to hold this level. At the same time, mid-cap index definitely looks comparatively better, means we have almost reached to the record highs again. So focus should be more on larger mid-caps and quality small cap space wherein we are seeing, relatively higher strength. So as of now, large cap, larger mid-cap, they are better positioned.
Okay, all right. Let's also talk about railway and defense stocks, because yesterday they did see some buying traction. Anything that you're liking from this space, and how are you positioned there?
So defense, yes, means we were seeing correction in defense basket, but the rebound is equally sharp. Some of the names like BEL, HAL, they are among the top performing names. After this correction, we may see a bit of a consolidation followed by a sustained rebound. So defense, definitely one can continue to look for buying opportunities. Railways, on the other hand, we still feel that the overall downtrend is still intact. So we see a day or two of kind of a recovery or a rebound move, but it eventually fizzles out. So one should wait and see any sign of decisive, like in a reversal pattern formation in the railways counter. Those who are stuck at the higher levels definitely can utilize this recovery to reduce their position.
Okay, all right. Railway is something that you're cautious on. What about the consumer durable stocks? Because yesterday they also cooled off yesterday, and what are you making sense of this space?
So majority of the counters from the consumer durable basket either witnessing correction or consolidation. So still Voltas in this basket looks comparatively better. Means we are still holding above the major averages when it comes to the weekly chart around 13-20 levels. So in case if there will be any sustained rebound in this basket, Voltas might outperform. So as of now, one can continue to hold selective approach within this consumer durable basket, but we have better counters to look at. From the private banking, auto, metal, and select counters from the pharma space also. So this is something that you should be focusing on if the view is short term.
Okay, got it. All right, that's the view for consumer durable stocks. But yes, the headline remains today about the Ambuja Cement's approval of merger of ACC and Orient Cement as well to create a single consolidated cement platform. Now, the proposed consolidation is expected to be completed over the next year, and once implemented, all of these three entities will be under a unified corporate structure. Now, Ambuja Cements is planning to issue about 328 equity shares for about every 100 equity shares for ACC, and for Orient, also cement shareholders, Ambuja is expected to issue about 33 equity shares for every 100 equity shares. Just 15 seconds to go before we open. But yes, Ajit, I mean, what's your view? Because brokerages have remained quite positive on the counter. And how are you viewing these steps, and what do the charts indicate?
Yeah, so see, consolidation is something which is going on in the cement basket since long. Now, in fact, we were seeing a pause. So it's a kind of like a structural change. At the same time, as a sector, we believe that the recent price hike has been absorbed by the market, quite well. So overall, cement basket, yes, we have a positive view, and in fact, we have Ultratech and JK Lakshmi in our coverage. Ambuja, still we feel that in the short term point of view, it may continue to find resistance around 560 area. The moment we surpass this level decisively, then we can see some strong directional move on the higher side. So as of now, it looks consolidation might continue with 560 as a hurdle.
Okay, all right. That's the view coming in for the cement stocks. And if you look at the open rates for the cement space, Ambuja Cement's trading with about 3% gains. ACC with about flat, but with about 0.3% gain. And Orient Cements definitely gaining with about 9% gains as of now. So yes, the cement baskets remain quite buoyant on the plans of the merger. But yes, the first rates coming on your screen, where we have opened quite flattish in the trade. Nifty above that 26,170 mark as of now. If you look at Sensex, also open quite with about 34 points gain. So yes, it's a very fairly quiet start for the markets, and given it's also the weekly expiry day, so some volatility can be expected on the back of that as well. But yes, Bank Nifty also starting the day with about flat with a positive bias. If you look at the broader end of the markets, fairly remain quite unchanged, so we'll watch out for how the rates unfold in the later part of the session. But yes, coming to the sectoral moves of how we are starting off today, Nifty IT index snapping its 4-day winning streak with about 0.8% decline. Nifty auto index has opened quite flat with a positive bias. Pharma remains resilient with about 0.1% gains. PSU banks also remain quite steady. However, realty space remains, continues to cool off from yesterday. FMCG basket showcasing a flat to a negative bias start. And if you look at Nifty consumer durables, one of the top sectoral underperformers yesterday, but it has opened with about flat with a positive bias. So yes, all in all, it's a quiet start for the markets, and we'll watch out how the moves pan out in the second half of the trading session. But yes, let's take a quick check of what is doing well in this market among the top Nifty gainers and losers. If you look at the gainers, Coal India is topping the list with about nearly a percent gains. Shriram Finance extending the gains to about the second consecutive day to today as well, on the back of the news development as well, with about 0.5% gains coming in from there as well. L&T, Titan, Power Grid, some of the other gainers on the Nifty 50. On the other hand, if you look at the losers, some of the IT stocks have taken a little bit of a setback, and as a result of which you can see Infosys showcasing a decline of about 1%. One of the top Nifty losers, Tech Mahindra, TCS, Wipro, HCL Tech, some of the other losers on the Nifty 50. Bharat Electronics also showcasing a decline of about 0.7%. And if you look at Tata Motors passenger vehicles, also showcasing a decline of about nearly 0.5% itself as well. But yes, let's talk about the IT stocks, and of course particularly for HCL Tech, given that the company has announced that its software division, HCL Software, is planning to acquire its intent, that is your Vobi, which is an early stage startup in Belgium. But yes, coming to you, Ajit, I mean, from September lows, the stock has added 20%. Today it's seeing a bit of a cool off, but can we see further upside going ahead?
Yeah, so in fact, the IT index, Lovisha, we have seen decent recovery in the last 1.5 months. We are back to the previous swing highs, which Nifty had tested. Nifty IT has tested in the month of July. So a normal consolidation or pullback is likely, but the trend is likely to remain positive. Means the moment, let's say we surpass this 39,600 zone in the Nifty IT index, we might see the next leg of the move unfold. SCL Tech within the large cap names, it's consolidating around the previous swing high as well. So means this zone close to around 1700 is what is acting as an immediate resistance. So a decisive close above this would mark the next leg of the up move. So as of now, in case if you have any existing position, you can definitely stay put. 1620 should be your stop loss, and 1780 to 1800, that should be your target zone.
All right, 1780 can be the target zone for HCL Tech as of now. But let's move on and talk about another stock in focus which has been doing quite well. That is your GPT Infra Projects. The company has emerged as the lowest bidder for 670 crore rupees of a road project which has been awarded by NHAI, and that strengthens its order book in the highway segment itself. And right now the stock has been trading with about 6% gains. But yes, Ajit, I mean, today we are seeing good volumes, but the stock has been range bound around that 100 to 106 odd levels. What do you expect? Can the move sustain from today?
So it's a very volatile stock, Lovisha. Means of late, in fact, we started seeing very strong volume action also alongside with the price. So as of now, yes, it looks okay. Means it's been almost in fact 1.5 years of consolidation which has already taken place, and now we are seeing serious attempt with volume. So yes, you can continue to hold your longs. 105, 104. That's the support zone, base zone, where we are seeing buying interest emerging on every day. So that should be a stop loss, and gradually we can see the stock inching towards 135, the previous swing highs.
All right, that's the view for GPT Infra. The stock has been trading with about 6% gains as of now. But let's take a quick check of the live queries that is coming in on our live feed as well. The first query coming in from Naveen is asking the view on UPL, on how the stock particularly is expected to fare. Of course, we have seen that so far this year the stock has moved quite spectacular. But yes, Ajit, coming to you, UPL, how does the stock look like? Because even today we have seen that its subsidiaries has entered into an agreement to acquire Hybrid Seeds Vietnam.
Lovisha, it's been almost 4 years now that the stock has been consolidating. The last 2 years has been the phase of recovery. Now we have almost reached closer to the record highs. So everything looks okay. Means it's a kind of like a buying pivot formation around the record highs that has taken place. 740 is now the new base. So with that as a stop loss, definitely you can continue to stay put. In the next leg, means around the record highs, I'll not be surprised that we inched toward, let's say, 850, 900 levels. So the risk reward is also favorable. With 740 as a stop loss, you can definitely stay put.
Okay, all right. Stay put for UPL. That's the view. Right. Let's take another viewer query. We have Sameer Nayak who's been asking the view on Concord systems, Concord control systems, because he's been holding about 1,200 shares at an average price of about 780 rupees. He's sitting with a profit of over 2x, and yesterday also has won an order of about 139 crore rupees from Indian Railways. Ajit, what's your view for Concord control? I mean, the stock today has hit in 5% upper circuit.
See, Concor, what we are seeing is a kind of like stability after the phase of correction, but overall, the downside seems capped. That is the good part. And upside, the moment, let's say we surpass these 520 levels, and 550, 560 is also possible. So yes, you can continue to hold your longs with 480 as a stop loss.
Okay, all right. That's the view for Concord Control Systems. And of course, today the stock has been doing quite well with about 5% upper circuit as of now. But yes, let's move on with the next viewer query. That is your Naveen, who's been asking the view on Birlasoft and if there is any fresh entry levels that we need to watch out for. Ajit, I know you have been quite bullish on the IT space, but for Birlasoft, any levels that you need to watch out for?
So Birlasoft was among the underperforming names, Lovisha, means, within the mid-cap IT basket. Now we have started seeing decisive sign of reversal. So that's positive, means the stock has reclaimed all the major averages. It's kind of like a buying pivot also formed while holding above the same. So yes, we can expect further recovery, and this rebound may be close to around 500, 510, something that the stock might test. So yes, from the trading point of view, 420, that should be your stop at present. And with that as a stop loss, 500 is something that you can target as a positional target.
Okay, all right. That's the view for Birlasoft. However, today the stock has been trading with about nearly a percent decline. All right, let's move on with the next viewer query. We have Sandeep, who's been asking the view on GAIL because he's been holding about 500 shares at an average price of about 197, and he's asking whether he can buy on dip or exit the stock at the particular price point. So he's seeing a bit of a loss because his buying price has been at about 197. Ajit, what's your take? I mean, past 1 month also the stock has undergone some correction.
So in fact, if you see, Lovisha, that within the energy basket, majority of the name excluding the OMC basket are still either consolidating or trading with a negative bias. So GAIL is also struggling for any sustained up move. The stock is trading below the major averages. So consolidation is more likely because the downside seems capped as well, because the last time when the stock retraced close to around 160, 65 is something that acted as a very strong buying zone. So after retesting that mark, we are seeing this recovery, but upside around 178, 180 is where we have multiple resistances. So this range is likely to play out in the coming weeks as well, means 165 to 180. For any fresh buying, let the stock surpass 180 decisively, then only you should look for long trades. For existing position, 165 should be a stop loss, and around 180 you should look for exiting those trades.
All right, 180 is the level where he can exit the particular counter. All right, let's move on with our next viewer query. We have Anil, who's been asking the view on JK Tyres on how this particular stock looks like. Of course, so far this year the stock has been on a good trajectory itself. But yes, Ajit, any levels that we need to watch out for JK Tyres?
So it's a strong consolidation range or pivot breakout. The stock formed a strong buying pivot around the 20 EMA mark, and we have seen a fresh breakout from the same with strong volumes. So everything looks in sync, means with 475 as a stop, one can wait for the newer highs. So last time around 543 was the area basically where we saw the stock testing the record highs. So around that area might act as the immediate resistance, and then towards 580 and 600 levels. So with 475, definitely you can continue to hold your longs.
Okay, all right. 475 is a support level for JK Tyres then. Right, let's move on to our next viewer query. We have Contech, who's been asking the view on Fortis Health on how this particular counter looks like. Today the stock has been trading with about 0.8% decline. And even if you look at from a 1 month perspective, the stock has been declining. But in the past 5 days, the stock has received some buying traction. That's why, as a result of which, it is up by about 3% itself. Ajit, what's your view for Fortis?
So Fortis, after this corrective phase from its record high from roughly around 1100 to 850, the long-term averages got tested, and now we are seeing the stock is gradually inching higher. 917, that's the immediate resistance, the 100 EMA mark. The moment we cross this, then probably we are set for the further rebound towards 955 to 970 area. So as of now, it's a hold. For fresh buying, one should wait, let the stock surpass this 920 area. And in the interim, 890, that should be a stop loss. Around 975, 980, you should reevaluate your position again.
Okay, all right. That's the view for Fortis Healthcare. Let's move on with the next viewer query. We have Setha Romulu, who's been asking the view on Hindalco and what the fresh entry levels looks like for the counter. Of course, the entire metal basket has been quite buoyant this year itself. But yes, Ajit, what's your view? Because Hindalco has been on an upward trajectory.
That's true. In fact, the metal basket alongside with auto, private banking, they are among the top performing sector. And we feel that Hindalco is a very steady and gradual up move. The stock is currently trading around the record highs. This recent base around 850-55 is the zone basically where one can maintain the stop loss. Since we are at the record highs, the upside is open, means on every uptick, let's say around 3 to 5%, one should trail the stop loss to 2 to 3%. So as of now, 850 as a stop loss, 910, 920 that you can maintain as a target.
Okay, all right. 920 can be the next target for Hindalco. We need to watch out for that. Let's move on with the next viewer query. Then we have Komal Makhija, who's been asking the view on SBI and whether it's late for a fresh entry in the SBI for a long-term investment horizon. Of course, we've seen quite a bit of the rally in the PSU lender itself. But yes, Ajit, what would you advise? I mean, is it too late for a fresh entry or can she accumulate at the current levels?
So, she mentioned long term. So, long term, I still feel that, after this almost a year-long consolidation, yes, the stock has experienced a strong vertical move, but now from almost like 2-3 weeks, we are seeing consolidation. So, still okay, means she should accumulate the stock in staggered manner. So, around current area, she can add partially, and in case if there will be any dip around 920, she can add more.
Okay, 920 is the price point where she can add more for SBI. Right, on that note, let's move on to our next viewer query. We have RJ James, who's been asking the view on Power Grid because he has been holding the stock from the past 5 years and he's asking whether it's a good time to accumulate at the current levels. Ajit, what's your take? I mean, because so far this year, the stock has been an underperformer.
Right. So, Lovisha, like what you shared about the energy counters witnessing consolidation, majority of the names excluding the OMCs. So, it's Power Grid is no different. Means after this record highs in the month of September last year, we are seeing gradual consolidation. But of late, in fact, in the last couple of months, we are seeing more of time-wise correction instead of price-wise. So, that is a good point. As of now, this zone close to 240-45 is where we have multiple supports. So since he is a long-term investor, he's already spent 5 years with the stock and still trying to accumulate more. He can consider accumulating at current levels and add more in case if we see any dip towards 240.
Okay, all right. 240 is the next dip that can be anticipated. But yes, on that note, we have another energy query, stock-related query by Satya. He's been asking about PFC and whether it's the right time and price to average from a 12 to 18 months time horizon. Any thoughts on this particular counter, Ajit?
Yes, so one can consider adding to PFC now from the long-term time horizon, considering that the last two instances when the stock tested close to around 320-25 area, we saw a decent rebound. So for any trend reversal, of course, we need a close above 400 mark. But yes, a rebound is possible. And since he's a long-term investor, he can consider adding to his existing positions.
Okay, all right. All right, we have another viewer query by Shweta, who has been asking the view on Tube Investments because her buying price has been at about 2650 and she's asking whether it's good to hold or shift to Sona BLW or Samvardhana Motherson. 2650 and the stock has been trading at about 2579. What would you advise, Ajit? I mean, is it time for her to shift her investment in Sona BLW or the other one that she's mentioned, or good time to hold?
So she can consider booking profits here, and Samvardhana Motherson definitely she can consider. The stock has been maintaining the positive tone, means it's gradually inching higher. The kind of outperformance that we are seeing in the auto basket, that should reflect in the ancillary space also in the coming months. So yes, she can consider doing this.
Okay, all right. She can consider moving her money a little bit. All right, let's move on to our next viewer query then. We have We have Alex who's been asking the view on data patterns for a fresh long-term investment on the current levels. Data patterns today it's trading with about 0.5% gains, but yes, the stock has been consolidating around that 25 to 2600 odd levels itself. Ajit, what's your view for data patterns?
So, like what we shared about the defense as a basket, data patterns has also done well, exceptionally well, in fact, in the recent month. And now, after retesting closer to its record high zone, we are seeing this time-wise correction. So, 2400 is a very strong base for this stock. So, as long as we are maintaining above this mark, definitely you can consider adding more. On the higher side, 2800 is the immediate hurdle. The moment we cross, the stock is set for the record highs again. So, yes, you can look for fresh accumulation with 2400 as a stop loss.
All right, 2400 as a stop loss for data patterns. All right, let's move on with the next stock in focus. And a viewer query by Shweta Naidu has been asking the view on Dixon because she's bought it at about 1366 odd levels. And if there is any momentum expected, or should she exit and add CG power at the current levels? What would your advice be, Ajit? Because yesterday also the stock did see some, brokerage note flashes where there was certain growth uncertainty over the IT hardware import norms. What should she do? Because yesterday it broke below that 13,000 levels itself.
Yes, in fact, Lovisha, all the EMS counters post the news in Cairns are struggling. Means that Dixon has also retraced roughly around 13% in this month so far, and still there is no decisive sign of reversal. So as of now, it's I won't recommend her to switch. At current levels, let the stock show some sign of further weakness below 12,000 mark. Then only should consider exiting. In that case, maybe 10,300 could be the area where the stock might retrace to. So as of now, with 12,000, because we are very closer to that mark, 600 points away, one can continue to hold. CG power is consolidating in a range as of now. So there's no point changing hands at current levels.
Okay, all right. Right, that's the view for both of these counters. Then let's move on with the next viewer query. We have Vijay, who's been asking the view on Vikram Engineering, and he's asking what the next near-term moves look like for this particular counter. Of course, it's a recently listed counter itself, Ajit, but any thoughts on this? Because from the past 1 month, the stock has been under correction mode, 15% downtick.
That's right. And in fact, Lovisha, we are seeing hardly any volumes, on the days of rebound. So it's not a good sign. So this may result in further decline in coming sessions. So if the view is short term, you have bought it for trading. Prudent approach is to avoid such stock and exit if you have any existing position.
All right, that's the view for this particular counter. All right, just one last question before we let you go, Ajit. What are your top picks? Let us know anything that you're finding interesting in this market.
Yeah, so Bharti Airtel definitely, Lovisha, is one of the most consistent name within the telecom basket. Means after this recent price consolidation, the stock has been inching towards the record highs again. So we believe that it's a good area to accumulate fresh, Bharti Airtel with 2090 as a stop loss and 2250 as a positional target. Then from the metal space, wherein we are seeing steady traction, NMDC. We have seen a fresh breakout from the consolidation range. The stock is currently quoting around 80 marks. So with stop at 76, one can accumulate NMDC at current levels with 76 as a stop loss and 86 as a target area.
Okay, all right. NMDC and Bharti Airtel, those are the two stocks we need to watch out for. But with that, we have to let you go, Ajit. But Happy New Year. And of course, thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at the Sensex and Nifty levels as of now, Sensex has been quite volatile and right now it's down by about 160 points. Nifty is also showcasing a decline of about 31 points. It's below that 26,150 odd level. So yes, the market has been on a quiet trajectory, so to say, as of now. If you look at India VIX, however, it still remains at nearly at its all-time low level. So no immediate panic, which has been pricing in by the traders as of now. But yes, given it's the weekly expiry day, so some traders could be closing in on their positions. But yes, from the sectoral front, Nifty IT index snapping its 4-day winning streak, and right now it's trading with cuts of about 1% itself. On the other hand, if you look at Bank Nifty Index, that has also been quite flattish, flat with a negative bias. Broader end of the markets, no major enthusiasm coming in from there itself, because both the mid-cap and small-cap indices have been quite flattish in the trade. So yes, it's a quiet move for the markets, defying the strong moves that came in from the global markets. We'll watch out whether the second half of the session could be picking up, but let's watch out on that. But let's quickly move on to our next guest of the show. We have Sneha Poddar, Vice President Research at Wealth Management of Motilal Oswal Financial Services, joining us. Sneha, good morning. So good to have you with us. I mean, the market fundamentals look quite strong. If you look at brokerages, they have been estimating double-digit earnings growth from the second half. I mean, from FY27 itself. There we have a healthy GDP, low inflation, and we have rupee also now quietly rebounding as well. But earnings growth, that remains a concern. So, do you expect a value hunting to remain a challenge for investors for 2026 as well?
Hi, good morning. So as you mentioned, the fundamentals are turning positive, but in terms of earnings delivery, I mean, people will wait and watch for the Q3 numbers and management commentary so as to get the assurance that the various fiscal and the monetary measures that the government had taken, which should provide support to the overall consumption boost. So that should actually start reflecting in the Q3 numbers. So people are waiting for that. And secondly, the capex, which has been lackluster so far. So that is expected to pick up, because if that doesn't pick up, then the overall recovery in the numbers going ahead in the subsequent quarters will not really materialize. So pickup of the capex is very crucial. Yesterday, the core data, the core data for the 8 sectors which came out, at least that was pretty healthy, and that points towards that the probably the capex revival has started. But the cement demand and the overall, it is yet to be seen full-fledgedly. So it's just that people are kind of awaiting that. Moreover, rupee has just strengthened a little over past 2 days. So if no further volatile move comes in for the rupee, and if it stabilizes at these levels, then it will provide some positive boost. The markets are likely to consolidate, at least for some time, because with the Christmas and the New Year in the hindsight. So normally, the FIs, they kind of go on leaves. So there the volumes will be very thin, and overall, people generally go on holidays. So the market activities kind of tend to turn lackluster, and thus you will witness some sort of consolidation taking place over the next 15 days. January month could be volatile ahead of the budget. That would present actually a good opportunity to do value hunting, because budget expectations along with the Q3 numbers that will roll out, so that will keep markets pretty volatile, and that could throw us a good opportunities to start accumulating good stocks. But having said all this, the ultimate market driver for the for entire 2026 will be the Q3 numbers and the management commentary. And along with that, very important would be how the rupee stabilizes and whether FIs do come back. And even we should not forget that the US India trade deal has not yet concluded. So even that is kind of playing spoil sport, though India has signed FTAs with various other countries. But then the US India trade deal is a major one which everyone is waiting for. So there are few concerns, though the overall domestic macro and micro factors look favorable. But then if these concerns get addressed, then probably we can expect new highs for the market.
Okay, all right. New highs could be possible for the market. But Sneha, if you look at the recap of 2025, large caps led the rally, but there was no major participation that came in from the mid and small caps. Small caps particularly lagged with about nearly 6% decline for the Nifty small cap index itself. How do you see 2026 to pan out for the broader end of the markets? Can we expect further pain or do you see certain revival?
See, we can expect certain revival. I mean, the reason behind this disparity was, in case of especially small caps, there was a lot of disappointment with regards to earnings. While mid caps and large caps, the earnings were pretty good. I mean, large caps it was pretty healthy, and mid caps we saw good, strong earnings even compared to large caps. But then small caps disappointed on a in a big way. So the small caps earnings has to revive before we can expect any meaningful momentum in that segment. Having said this, we are suggesting all our clients and all to stay more constructive towards the large caps and be selective in mid caps. Because in mid caps, though the earnings were much better than large cap also, but then mid caps trade at a premium compared to its historical average, while large cap there's a lot of comfort in terms of valuation. Small cap is trading at very high premium compared to its long term average. Small cap, the numbers are also not coming and the valuations are very expensive. These are kind of playing a spoil sport. So unless and until the earnings come back in small cap, we can expect the pain to continue. My suggestion would be to be more overweight on large caps, and one can do selective stock picking in case of mid caps, where the earnings delivery is pretty high.
Okay, all right. Mid-cap space is something that we can watch out for then. All right, Sneha, but you expect that Nifty is expected to reach new record highs. And even if we have global brokerages that are estimating about, good potential targets for the headline indices by the end of 2026. So, I mean, does this factor in a potential reversal in FII flows for India?
So this does factor in FII reversal because, see, I mean, at the global front, I mean, if the Fed continues with its rate cut, then obviously, FIs are expected to then come back to India. Moreover, the valuations have become quite reasonable, and with the geopolitical concerns kind of settling down, FIs can look at India, which is still one of the fastest growing economy, and moreover, the India's overall image on the global front has improved significantly. Various credit agencies have further raised the GDP estimates for India. From the fundamental perspective, there's no doubt with regards to India's growth. But if by any reason, if the US Fed doesn't continue with the further rate cuts, then probably the US market would continue to be lucrative. And secondly, the rupee has to kind of stabilize over here. All these, the global factors will actually determine whether FIs do make a comeback in FY 27 or calendar year 2026. Because if FIs don't come back, then probably we might not see new highs in 2026, because then the market is likely to stay in a consolidation mode.
Okay. Could be a year of consolidation if FI flows don't reverse. But yes, Sneha, I mean, let us know what sectors are you expecting to outperform in 2026 and where are you most cautious?
Okay, so we expect the BFSI space and the IT space to outperform. So with regards to BFSI, there's a lot of comfort with regards to valuation. Despite the strong move that we have seen in 2025, but still the valuations are pretty reasonable compared to the ROAs and compared to the NIM reversal that is being expected for 2026. So keeping that in mind, and keeping that the credit growth, which had fallen to single digit, has now reversed back to double digit, and with the overall consumption boost that the government has provided, all this should lead to good numbers for the BFSI space. So that is one space that we're very positive. IT, the risk reward is very favorable, and if the US continues with its rate cut, then the overall US economy is expected to bounce back, which will be positive for the Indian IT services company. And this, along with the new AI cycle, which is expected to start next year, so that will keep the IT stocks in momentum. So these two stocks are the ones where we are very positive upon. Auto can also be looked at from the consumption point of view. I mean, though majority of the auto stocks are at 52-week high or all-time high, but still the kind of demand that we have seen a month after month, the auto stocks can continue to see that, especially on the back of more penetration and on the back of premiumization trend which is being played out. So these three sectors are the major ones where we are quite positive. From the cautious point of view, probably oil and gas would be one sector where one can be a little cautious, because oil prices are being very volatile. If the oil prices doesn't fall much, then probably the OMC stocks might not do. I mean, there's a lot of uncertainty with regards to whether the OMCs will do well or the oil upstream sector will do well, because given the volatility, both the sectors are witnessing a lot of volatile movement in their stock prices.
Okay, all right. So oil and gas is something that we need to watch out for. But among individual movers, Sneha, I mean, today Ambuja Cements has approved merger of ACC and Orient Cement. Now the move comes as a consolidation of the cement business under one entity. But what does the swap ratio tell us, and who does it favor, and how should investors navigate it? Because if you look at today's stock performance, Orient Cement has been faring better than ACC.
In case of, simplification of the entire business, obviously this is positive for Ambuja Cement from that angle. Now, with regards to the swap ratio, in case of ACC, it has been done at the fair price. In case of Orient Cement, it is in favor of Orient Cement. I mean, around 9 to 10% premium has been given to Orient Cement valuation. That is why we're seeing the positive momentum in Orient Cement. Now, though in the short term, this will lead to equity dilution for Ambuja Cement in the range of about 10 to 12%, and the promoter holding stake will actually come reduce to 60% compared to earlier 60, almost 68%. But then from the long term perspective, we believe that the simplification of the structure will help a lot in overall cleaning up of the balance sheet. And moreover, given the strong cash flows that the company has, though in the short term, given the higher capex that they have planned, the company will turn from the net cash position to net debt position. But then eventually, again, in a matter of a year or two, they will again turn into a net cash position, which will be very beneficial for the company. And moreover, from the industry point of view, if we look at the consolidation will help Ambuja emerge as a large single pure play cement entity for the Adani group. So that will clean have a much higher impact on the overall industry level, because it will make Ambuja as one of the leading companies as compared to Ultratech. So from the long term perspective, we believe this action to be very positive for the company.
Okay, all right. That's the view from the cement space itself. But yes, Sneha, you were talking about the capex revival itself. I mean, we have seen that yesterday railway stocks have fared well, but so far this year it has been a disappointment. About over 1 lakh crore rupees of investor wealth has been eroded in the railway sector itself. How are you navigating it for 2026? How does it look like? Because even yesterday we had some news flow that the Indian Railways has increased a little bit of fares for the passengers.
So there has been a couple of news flows in the railway sector, but still that really doesn't make us very constructive on the sector, because railway sector tend to be in news ahead of the budget, and they tend to see some sort of action. So the entire Jan month probably we might see a lot of activity in the railway counters. But then the budget announcement will be really crucial, because over last 2 years budget, if you notice, railway has not got any meaningful allocation. So the allocations has been flat in over the last two budgets. So if the meaningful allocation doesn't come even in this budget, then probably the railway stocks will lose the steam once the budget event gets over. So my suggestion would be to look at the railway sector from the short-term perspective only, till we get further clarity in the upcoming budget.
Okay, all right. So a certain budget-led rally could be possible in Jan itself. But yes, on that thought, we have to let you go, Sneha. But thank you so much for your time and having a conversation with us. All right, let's take a quick check of the markets, of how we are faring so far as of now, because we did start on a very quiet set of note. If you look at Sensex, right now it's trading with about 139 points cut. Nifty is also down below that 26,150 odd level. So yes, the markets have been quite steady at those levels as of now, flat with a negative bias, so to say. If you look at the broader end of the markets, they also remain quite very quiet in the market as of now. If you look at the mid-cap index, that is showcasing a decline of about 0.2%. Small caps, however, flat with a positive bias. Among the sectoral index, what has been doing well, that is your Nifty Metal Index. 0.5% gains coming in from the metal basket, and it is now up for the 5th consecutive session itself. So yes, metal stocks remain quite buoyant in this otherwise weak market itself. On the other hand, if you look at Nifty IT Index, that has snapped its 4-day winning gains. It's down by about 1%. Nifty PSU Bank has also been bucking the trend, flat with a positive bias. On the other hand, pharma and media stocks also remain quite resilient in this market. But yes, all in all, autos, realty, FMCG, IT stocks, all of them suffering in the trade, so to say, as of now. But yes, so we'll watch out for the second half of the trading session of how both the headline indices pan out and whether there is a late recovery in the markets or not, like we are hoping for. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market has developed with our experts, and we'll also be discussing individual stock movers that have grabbed the headline. Until then, signing off.